I'm here with Lisa Peterson, Wisconsin Underwriting Counsel, and Dwayne Wench, Wisconsin State Counsel, from the Fidelity National Title Group, which encompasses Chicago Title, Commonwealth Land Title, and Fidelity National Title. Today's title topic is gap insurance. When is it available?
And I like to call it gap. Is it a given? I think one of the biggest misconceptions that everybody has, I shouldn't say everybody, realtors and lenders have when it comes to gap insurance is that because it's in the Wisconsin state form of purchase contract or offer to purchase as a seller paid item, and they can choose between buyer and seller, that it's automatically that's something that us title people have to give on every single deal. Right, Dwayne?
Not so.
They all seem to think that it's because it's part of the contract, it's there for our responsibility, and we have to give it every single time. So that's one of the questions that Dwayne and I get asked very often is, when is gap actually available, and must I give it because it's part of the offer? Right. Now, my canned answer to that is, it may be part of the offer as between buyer and seller, but as between us and our potential insured, the buyer, or us and the seller who's paying for the policy for the potential insured, we're not part of the contract, so it's not something that we absolutely have to give. Now, that said, all of the parties to the transaction are going to naturally assume that gap is going to be part of the deal because of the fact that it's in the offer to purchase. And I would say that on 99.9% of the commercial deals that we do, it's expected that we're going to give gap, either in the form of marking up the title commitment or actually giving the gap endorsement. So I think, Dwayne, we should talk about when is gap available versus when is it not available. And I think one of the things we need to start with is that before you commit to gap insurance, you have to review the actual title file every single time. You can't just assume that because it's part of the offer or because you have an attorney giving you a lot of pressure that they need to have gap, that it's automatically covered. You have to make a case-by-case determination about whether or not you're willing to give gap. And once you've made that decision about whether or not you're willing to give gap, one of the very first things you have to do is send that gap endorsement out with the title commitment. I don't know about you, Dwayne, but I think that's one of the biggest misconceptions. Our agents seem to think that they should wait until the final policy to issue that endorsement. But for the customer, that poses a tremendous amount of problems because that gap endorsement within it contains certain requirements that absolutely must be met. For example, deed. What kind of deed do they need, Dwayne?
A deed with warranties.
Absolutely. Second, let's see, what else is in there? They have to give us enough notice that they're going to close.
So many days.
Right, because if we're not doing the closing and someone else is doing the closing, a law firm, a lender, another title company on a split deal, we have to have enough time to update the records such that we know whether or not we're either still willing to take the risk or to show the parties what has to get paid at closing. And then we have the other issue of recording. You have to record the documents within 3 days following closing. If they don't have that endorsement up front, once you've made the decision to give the coverage, how do they know all these things need to get done? So that's the main thing, is once you've made the decision, issue the endorsement. So let's back up to, how do you make the decision? Dwayne, I'm going to quiz you. And you can answer yes, no, or maybe. Because in the world of title, we know that nothing is absolutely black and white all the time. First question. I am doing a title insurance commitment on a short sale, and the customers have said that they need gap insurance. If I ask you as a title examiner, is gap available on a short sale? Yes, no, or maybe?
My answer would be no. Or it might be maybe. Depends on what the rest of the title looks like. Are there liens against the seller?
I agree. I think at a short sale, it's probably a definite maybe. Because if I'm looking at a short sale and all I'm seeing in the short sale is one mortgage, and it just happens that the property's underwater because the market maybe in that particular area hasn't picked up enough such that they can cover the mortgage debt, I might say yes on a short sale because it's not necessarily a sign that the borrower's in trouble. However, if I'm looking at a short sale and what I'm seeing are a first mortgage, a second mortgage, a bunch of judgments, a bunch of other liens, and the whole reason it's a short sale is not a symptom of the market, but rather a symptom of the seller, then I'm going to be a little more hesitant to give gap. So I think maybe is probably the best answer in a short sale. What about in a deed in lieu of foreclosure, our other favorite topic?
My starting answer to that request for gap when the deed will be a deed in lieu of foreclosure is no.
Agreed. And why?
Because the lender made the loan that turned bad, that turned sour, why should the title company, for the payment of the same premium that we would get paid for a good transaction, agree to issue gap, when in fact the likelihood of a lien being filed against the grantor, the borrower who's about to give the property back, is very high?
Right. And the whole nature of a deed in lieu of foreclosure is that very thing. It's a deed instead of going into foreclosure. So if you really think about what gap is, what we're basically doing is analyzing the creditworthiness of the seller. Because odds are on your deed in lieu transaction, I think in a great majority of the cases, the entity that's giving the deed back to the bank instead of being foreclosed upon isn't going to survive the transaction. And remember that one of the conditions in that endorsement that you're going to issue when you are willing to give a gap endorsement is that the seller be prepared to sign an indemnity. And I like to call it the I'm not a naughty seller indemnity, that basically says that, look, I haven't filed for bankruptcy. I don't know of any other judgments that are coming. I'm not aware of anybody suing me. I haven't done any number of bad things that could result in a defect on title. And if any of those things happen, that indemnity says, I promise to you, Chicago Title, Fidelity National, or Commonwealth, that I, the seller, will make you whole. The very nature of a deed in lieu is, I've got a borrower who's in trouble. So what good is that indemnity going to do our company when either the entity's not going to survive, or if they do, they've got nothing left?
What if they make it instead of a quitclaim deed in lieu of foreclosure, a warranty deed in lieu of foreclosure? Would that have any effect? Or?
I don't think that helps. Do you? I mean,
No,
I
I
think we're
don't.
still in the same position. We've
Right.
got a troubled borrower. Now, what might give us some comfort is if we had somebody other than the borrower giving us the indemnity. Maybe the borrower is made up of an LLC, and that member of the LLC has enough financial wherewithal outside of what the LLC owns that if the member signs that gap indemnity individually, maybe then we'd consider it. Because the member might have the financial wherewithal as an individual that his entity that happened to make a bad loan doesn't. So that might give us a little more comfort. What about, Dwayne, a gap endorsement request when the property is in foreclosure?
No. I would not want to do that because the likelihood, again, foreclosure is a telltale sign of financial unhealth of the grantor. So I think the likelihood of there being a judgment, a tax lien, a construction lien filed against the grantor is elevated.
Agreed. What about a little twist on foreclosure? What about the deal where the bank has taken title back via foreclosure and now it's the bank that's selling to somebody else and the buyer from the bank wants gap insurance?
I think that's okay.
I think so too.
the bank has I would rather trust the bank's indemnity than my indemnity because they have a balance sheet.
Right, and the bank has kind of scrubbed the title clean through the course of foreclosure, and the odds, like you said, of the bank being in trouble are not all that, well, I shouldn't say they're not impossible in this day and age, but they're not they're much better indemnitary than most.
Yeah.
And I think on that score, we are asked a lot in that scenario where it's the bank selling post-foreclosure. What do we do if the bank doesn't want to give us an indemnity? The bank refuses to sign that gap indemnity. What do we do?
Good question. What do we do?
I think it depends on the bank. We look at the bank to see whether or not we're willing to take the indemnity from the bank, or to forego the indemnity from the bank based on probably who the bank is. But we still want the premium at the end of the day. Any other topics you can think of? Those are kind of the biggies, right? Deed in lieu of foreclosure, short sales, foreclosure, one quickie, bankruptcy. What do we do if the seller's in bankruptcy? Do we take
No gap insurance.
No gap, agreed. So it's a lot of maybes and a lot of yeses and very few nos in the world of gap. So that for today is gap. Is it a given? And the answer is maybe. So with that, we want to just put our own little disclaimer on here on behalf of the Fidelity National Title Group that the opinions expressed herein are the opinions of Dwayne and Lisa as the underwriting counsels of this company, but not necessarily the views of the company. Thank you.